This is Yahoo Finance Live. I'm Julie Hyman. That's Brad Smith. And here are three things you need to know this morning. The retail gloom makes its way to Lowe's. The home improvement retailer cutting its full-year outlook as do-it-yourself spending slows. The North Carolina-based business slashed its annual comparable sales and profit forecasts as still high inflation continues to eat into consumer budgets. The report picks up from last week's narrative of a choosier consumer. Remember, we saw that in numbers from Home Depot, Target, and Walmart. Secondly, no debt ceiling deal yet, but talks have been labeled constructive. Both President Biden and House Speaker Kevin McCarthy vowing to negotiate and avoid an unprecedented default. Despite some positive signs, the two sides do remain far apart on how to rein in the federal deficit, with GOP calls for entitlement reform not landing at the White House. Just last week, President Biden pushed back on tougher work requirements for accessing welfare. Stocks may largely be ignoring the turmoil, but it's a different story in the bond market. Yields on short-dated debt like 4-week Treasury bills and the 2-year bond both have been climbing. And Zoom shares struggling to hold on to yesterday's gains as the COVID-era winner initially rallied after raising full-year forecasts for both revenue and profit. Now, despite what appeared to be a strong report, shares pared gains, perhaps due to softer implied guidance for the enterprise division. The video conferencing platform has seen growth wind down since the heady days of 2020. Shares have plummeted from their highs, not just to their lowest since the pandemic, but actually to their lowest since April 2019, as Zoom faces increased competition from rivals like Microsoft and Cisco. We'll hear from CFO Kelly Steckelberg later this hour.